There is a silent robbery happening right now. It is happening while you sleep. It is happening while you work. It is happening every time you tap your card at the grocery store. You feel it, don't you? That subtle gnawing sensation that no matter how hard you work, you are falling further behind. That the walls are closing in. Most people think this is just bad luck or the economy. They are wrong. This is not an accident. This is a design. You are living through the end of a monetary cycle. And historically, when these cycles end, they do not end quietly. They end with a massive transfer of wealth. We are standing on the precipice of the greatest wealth transfer in human history. Trillions of dollars are about to change hands. This capital is looking for a home. It is fleeing from dying currencies and broken bonds, and it is desperate for an exit. For 99% of the population, this transfer will be a tragedy. They will see their savings evaporate in real terms. They will see their purchasing power destroyed by a system that requires inflation to survive. They will be the victims. But for a tiny minority, the 0.1% who understand the signal amidst the noise, this will be the greatest opportunity of their lives. You clicked on this video because you sense that something is shifting. You have heard about Bitcoin, maybe you own some, maybe you are skeptical, maybe you think you missed the boat. Let me be perfectly clear, you have not missed the boat, but the gangplank is being raised. The window of opportunity to acquire this asset before it becomes the exclusive playground of institutions and nation-states is closing, and the deadline is closer than you think. By the year 2026, the landscape will look unrecognizable. In this transmission, I am going to explain exactly why this transfer is happening. I am going to dismantle the lies you have been told about money, and I am going to explain why Bitcoin is not just a trade, but the only mathematical escape hatch from a burning building. This is not financial advice. This is a survival strategy for the digital age. Let us begin by diagnosing the disease, the Fiat Trap. To understand why you need Bitcoin, you must first understand why the money in your bank account is broken. In 1971, the link between the dollar and gold was severed. Before that, money represented proof of work. It was anchored to reality. After 1971, money became proof of debt. It became a fiction, backed only by the promise of politicians. Since then, the supply of money has expanded exponentially. When the government prints more money, they do not create more value. They simply dilute the value of the money you already hold. It is a hidden tax. If you worked for 1 hour in 1980, you could buy a certain amount of goods. Today, that same hour of labor buys you significantly less. They call this inflation. I call it time theft. They are stealing your time, your energy, and your life force, and they are doing it simply by pressing a button at a central bank. The wealthy understand this game. That is why they do not hold cash. They hold assets, real estate, stocks, art, gold, things that cannot be printed. But here is the problem. In a world of digital acceleration, physical assets are slow, they are heavy, they are hard to transport, and they are easy to confiscate. Real estate can be taxed into oblivion. Stocks are subject to the whims of regulators and corporate mismanagement. Gold is hard to move across borders in a crisis. The world is desperate for a new form of collateral, a store of value that is liquid, portable, unseizable, and absolutely scarce. This brings us to the demographic tsunami, the great wealth transfer. Right now, the baby boomer generation holds the vast majority of the world's wealth. We are talking about tens of trillions of dollars in real estate and equities. As this generation passes on, that capital is going to flow down to millennials and Gen Z. This is not just a transfer of money. It is a transfer of ideology. The boomers trusted the system, they trusted the banks, they trusted the pension funds. They grew up in an era where the system worked for them. The younger generations do not trust the system. They have seen 2008. They have seen hyperinflation. They have seen the housing market become unaffordable. They live on the internet. Their lives are digital. Their assets are digital. Do you really think the generation that grew up with the internet is going to store their wealth in gold bars buried in a vault? Do you think they are going to buy bonds that yield less than inflation? No. They are going to buy the apex predator of the digital realm. They are going to buy Bitcoin. This demographic shift is inevitable. It is a tidal wave that cannot be stopped, And as this capital flows from the analog world to the digital world, the price of the scarcest digital asset will react violently. But there is another player entering the arena, and this is why 2026 is your deadline. Phase 3, the institutional wall. For the first decade of Bitcoin's existence, it was a retail movement. It was distinct individuals, cypherpunks, and libertarians buying in. The big banks laughed at it. The CEOs called it a fraud. That era is over. Look at what happened in the last 2 years. BlackRock, Fidelity, the largest asset managers on the planet have entered the game. They did not enter to participate. They entered to dominate. They have launched spot ETFs. They are building the infrastructure to sell Bitcoin to pension funds, to endowments, to sovereign wealth funds. You need to understand the scale of this. Retail investors, people like you and me, move billions. Institutional investors move trillions. When a pension fund decides to allocate just 1% of its portfolio to Bitcoin, that is billions of dollars of buying pressure. And here is the catch. Bitcoin has a fixed supply. There will only ever be 21 million coins. Most of those coins are already mined. Most of those coins are held by diamond hands who will never sell. The amount of liquid Bitcoin available on exchanges is at historic lows. So, what happens when an ocean of institutional money tries to squeeze into a tiny glass of available supply? The price goes parabolic. But there is a darker side to this institutional adoption. They are building a wall around the asset. Right now, you can still buy Bitcoin relatively cheaply. You can still withdraw it to your own cold storage. You can still be a sovereign owner. But as the price rises to hundreds of thousands of dollars, Bitcoin will become out of reach for the common man. It will become like buying a building in Manhattan. You won't be able to buy a whole Bitcoin. You will be lucky to buy a fraction of a fraction. The institutions want to turn Bitcoin into just another financial product. They want you to buy their ETF, where they hold the keys, and you pay the fees. They want to capture the asset so they can control it. The window to front-run the institutions is closing. They are accumulating right now. While the news tells you to be afraid, while the price chops sideways and bores you to death, they are buying. Why 2026? Let's look at the cycle. Bitcoin operates on a 4-year rhythm, dictated by the halving. The supply of new Bitcoin is cut in half every 4 years. This creates a supply shock. We are currently in the post-halving phase. Historically, this is when the supply shock meets demand shock. If history rhymes, the peak of this cycle will accelerate through 2025 and solidify by 2026. By 2026, the regulatory frameworks will be set globally. The banks will have fully integrated crypto desks. The friction to buy will be zero. When your grandmother can buy Bitcoin from her regular bank account with one click, the early adopter phase is dead. The asymmetric opportunity is gone. You will no longer be early. You will just be exit liquidity for the people who bought today. You must position yourself before the herd arrives. You must be the one selling the water to the fire department, not the one burning in the house. Now, let's discuss the nature of the asset itself. Why Bitcoin? Why not crypto? This is a critical distinction. There is Bitcoin and there is everything else. Crypto is a casino. It is venture capital. It is centralized companies issuing tokens to enrich the founders. It is gambling. Bitcoin is digital property. It has no CEO. It has no marketing department. It has no headquarters. It is a decentralized network of energy and mathematics that no one controls and everyone can verify. It is the only asset in the universe with a strictly limited supply. You can print more dollars. You can mine more gold if the price goes up. You can build more real estate. You cannot create more Bitcoin. It is the first time in human history that we have absolute scarcity. When you own Bitcoin, you do not own a liability of someone else. You own a bearer asset. If you hold your private keys, that wealth is yours. No bank can freeze it. No government can debase it. You can memorize 12 words, cross a border, and carry your net worth in your head. That is true sovereignty. So, what is the protocol? How do you navigate this transfer without getting wrecked? Step 1. Change your unit of account. Stop measuring your wealth in dollars or pesos or euros. Those are melting ice cubes. Start measuring your wealth in satoshis. When the price of Bitcoin drops in dollar terms, do not see it as losing money. See it as the dollar temporarily gaining strength against the hardest asset on earth, giving you a discount. Step 2. Ignore the noise. The media exists to sell ads. They profit from your fear. They will tell you Bitcoin is dead. They will tell you it is a bubble. They will tell you the government is going to ban it. They have been saying this for 15 years. And for 15 years, Bitcoin has outperformed every other asset class known to man. It is the best performing asset of the decade. Do not let the headlines shake you out of your position. Step 3. Low time preference. This is the hardest part. The get-rich-quick mentality is a disease. If you buy Bitcoin thinking you will buy a Lamborghini next month, you will lose. You will panic sell when it drops 20%. You must think in 4-year cycles. You must treat this as a savings account that you do not touch for a decade. The volatility is the price you pay for the performance. If you cannot handle the drop, you do not deserve the rise. Step 4. Self-custody. This is the sovereign protocol. Not your keys, not your coins. If you leave your Bitcoin on an exchange, you do not own Bitcoin. You own an IOU. Exchanges can fail. We have seen it happen. Learning to use a hardware wallet is the most important skill you can learn in the 21st century. It is the act of taking total responsibility for your financial destiny. It is terrifying, yes, but it is necessary. We are entering a period of chaos. The sovereign debt crisis is looming. Nations are drowning in debt they can never repay. They have two choices: default or print the money. They will choose to print. They always print. This means inflation is not going away. It is going to get worse. The cost of living will continue to rise. The middle class will continue to be hollowed out. There are two paths forward for you. Path A. You stay in the fiat system. You work harder and harder for currency that is worth less and less. You trust the government to save you. You hope that a pension will be there when you retire. You accept the slow, comfortable decline into serfdom. Path B. You opt out. You take the fruit of your labor and you store it in an asset that cannot be corrupted. You accept the volatility. You accept the responsibility. You become your own central bank. The great wealth transfer is not asking for your permission. It is happening. The train is leaving the station. The institutions are boarding the first-class cabins. The smart retail investors are squeezing into the coaches. By 2026, the train will be moving too fast for you to jump on. You have a brief moment in history where you can front-run the biggest capital aggregators on the planet. You can buy the same asset as BlackRock at a fraction of the price they will eventually push it to. Do not squander this. Take 100 hours. Study Bitcoin. Read the Bitcoin Standard. Understand the mechanics of the blockchain. Do not buy it blindly because a video told you to. Buy it because you understand that it is the only mathematical solution to a broken world. The future belongs to those who prepare for it today. Do not let the volatility shake you. Do not let the noise distract you. Stay focused. Stay sovereign. This is the sovereign protocol.